Hey there. I wanted to give you a quick update on my Robinhood account. This is what we're sitting at. This is Friday, May 29th, 2020. Um, Looks like we're down a little bit for the week. I thought I was up, but maybe just dropped the last couple days. But overall, our Robinhood account looks like it's up 15%, a little less than a year I've had my account. Um, I was going to give some updates on my premium I sold this week, as well as my dividends for the month of May. And so today we're obviously down, and then this is for the week. The month's been good, and then the 3 months have been good, obviously. And this is overall, it says we are up almost $7,000. So I did sell quite a bit of options this week. Right now, I'm really trying to stay out of the money with my stocks. The reason why I have a lot of, as you can see here, I have a lot of value stocks, and they're on the rebound. And I'm really trying to not have my strike prices met, and trying to keep my stocks. I'm really trying to stay out of the money. I sell options really late in the week. I sold options yesterday. I was going to sell options today, actually, for next week. But the key to getting the most out of your options is, one, let the market be up. The market's been down the last 2 days, or mostly today, a little bit yesterday. So I'm going to wait till Monday and sell options for next week. I did have some positions that were uncovered this week. AT&T, I didn't sell an option on. I just didn't like the price, what they were paying for what I was going to get. So basically, I didn't really want to sell the. It was above 30. It was like 31.25, 31.30 going into today. I didn't want to sell the $32 option because I didn't want it to have a great day or a good day, and then I have to roll my option over. So I elected not to sell options yesterday on that, and I was going to sell it for this week if the stock was up today. For next week, I'm sorry, if the stock was up today and it just was down. So I'm going to wait for a green day, hopefully on Monday, and then sell options on Monday, hopefully for next week, and then June 5th. One thing about options, how I look at it, is I'm in no hurry to sell my options. I really want to keep my stocks as much as I can and not roll them over. It's easy to get behind, especially on stocks that are down that are looking to climb back up. Like AIG, I'm behind on quite a bit. I still own the stock. I have an option for it expiring on the 19th of June. I'll probably have to roll it up again. And what I do when I roll that out is I try to not only get some premium on it, but I try to raise my strike price up to maybe, like right now, maybe I think it's at 26. I'm going to try to raise it up to $27, as well as get some premium and push it out, obviously 2 or 3 weeks. So you get behind on them, and I prefer to sell weekly options. It's where you make the most amount of money on your stocks. It's more entailed and knowledge of what's going on, and you really have to watch them, and sometimes you have to roll them over. But I get the most premium out of weekly options, and I feel like I have the least amount of risk, and that's why I sell weekly options. But the reason why I don't want my strike price to be met at 32, 2 weeks into the option, and then the stock goes up to 36, my option closes, and I lose $400 worth of income or a stock value by doing that. And so I've done that a lot in the past, and actually I made a lot of mistakes doing that. And so I really try to do just weekly options. I try to hold weekly option stocks. Actually, most of these are all weekly option stocks. So yeah, these are my stocks I'm holding right now. I rolled out of a few things. I have KeyBank, or KeyCorp. It's a weekly option stock. I think it's my only bank stock I own. I've had a few others, but I really try to roll into weekly option stocks is what I'm trying to do. There are Maine is a non-option stock. It's obviously I guess it's a form of a REIT or an investment company, or let's see here, Capital. That's what it is, Maine Capital. And I bought this at 24, and I'm riding this sucker up, and so hopefully it keeps going. I know it was around 40 before, so hopefully we get somewhere up near there. And it's been a good stock for me, obviously a good gainer. I almost all value dividend companies. I just felt like they're beaten down a lot, and I was already a dividend investor, so I rolled out of some crappier stocks to hopefully some better stocks. HPQ had a rough week. Yesterday was a down day. I'm looking for that to recover next week a little bit. ET, I still have my 1,200 shares, but I do have them covered for next week, and I'm trying to roll out an $8 cover call on ET. But I rolled it out this week, and I got it was due on this Friday the 19th at $8. I rolled it up, and I picked up another $70 for those 1,000 shares, and then I have 200 shares that were I sold a $9 cover call on and got a few bucks. I'd roll a lot of $5, $10 weekly options. You can say, man, that's not a lot of money, and it's not, but it really adds up. For example, this week, my covered call between my two platforms, this is both this platform and my Charles Schwab, my income on my covered call premium, $315, a lot of $5, $10, $15 covered call options, and a lot of weeklies. Some I sold on Friday. There are a few monthlies in there. This just kind of gives you right now what I have. I have UPRO. I'm still behind on that. I sold the cover call. The stock shot up. I rolled out of it, and so hopefully I could get ahead of it again. But right now, I think I have a $39 strike price, and so I'm probably going to need to roll out of that in another week or so. And again, try to raise my strike price as well, collect a little premium. TNA is a Russell 2000 or small cap ETF, I'm sorry, and I am uncovered on that right now, which is good. And I also own some more of that in my Charles Schwab. The rest of these, I rolled out of some of these ETFs. I just had one. I had one just stock of. I just, and I also sold SDIV, and I starting to pick up position in OLN, which is a chemical weekly option stock, dividend stock. It's a chemical company, and I'm looking to complete a full position on that. Hopefully next week I'll have a full position on that. I sold SDIV. I just didn't like the history of it. Didn't really like it's a very high-paying dividend stock, and usually the higher the paying dividend ETF, the more the issue with it. I think it's probably going to roll up in value, or go up in value next week or next month or so. But I decided to move on to something I could sell a weekly covered call on, and you can sell monthly covered calls on SDIV, but it doesn't have a lot of interest in that. So real quick, this is what I still have some calls. I have ET expiring $9 next week. I have a covered call at $9. I think I got about a nickel. I do that a lot. I mean, I pick up those nickels, pick up those $5, $5 an option, and quite often actually, and it adds up. And you do that over week to week to week to week. It's quite a bit of income. Honestly, I had a $315 premium this week, and I could easily have pushed it up to $500 without even trying too hard. I was just being very, very safe, and still then sometimes my strike prices get hit or get met. And so BP, again, these are expiring next week, so they went down today. I sold most of these yesterday. ET's rolled over from weeks prior, but I did pick up $70 on that rollover of those 10 positions. PFE, Visor, I sold that yesterday, and I got actually has a 6/12 expiration date. I believe I got around $17 per position. UPRO, I'm still, so you can see I'm behind. I have a $39.50 cover call price. It's got a 6/12 expiration date, so about 2 weeks from today. And if I can't get ahead of it, which I probably won't be, I'll just roll it over again. As long as I can make some more premium off of it, and then I can raise my strike price. I'll see if I can get it up to 40, 41, somewhere in that range, 41.50, 40 or 41, and then push it farther out. I'm collecting more stock value on the higher strike price, so I'm coming ahead anyway. So as long as I can I still hold on to it, and UPO is a triple weighted S&P 500 ETF. PTI, it's an option. Those are options. Those are options I own actually, and those are I bought, and those are actually a small company. AIG, so you can see I'm way behind on that. It's got a value of $4.48 up because I've rolled up to it, and again I'm probably going to have to roll out of it again in another couple of weeks. And the last one is EPD. It's got a 6/19 date on it. I have a $19 strike price. You can see it has 83 cents. So it happens. Your strike prices do get met, and so you can roll out of them, or you can let them expire and buy the stock back, or roll in, or put your money back to another stock. That's kind of it. Again, my weekly option income, $315. And again, my monthly dividend income is $846. And so that was from both, that we're talking for both of my platforms, both Charles Schwab and Robinhood. So you definitely can make some income. I'm trying to hopefully make some more income next week. I know that my dividends next month are around $800. It's projected right now, so we'll see if that all comes to be. And I'll give updates weekly on my premium income off my covered calls. All right, guys, thank you.